You're listening to the Simple Growth Podcast, the show that helps business owners get their life back. Here's your host, Mike Callahan.
O'clock last night. Hey, welcome back to the SA Weekly Talk Show. Had some technical difficulties. Right back again with Carla of Landscaping Accounting of Cycle CPA. And Carla, want to open it up really quick. Obviously, you're an expert in the industry in all things accounting for lawn care and landscaping. If you're in a different industry, such as home cleaning, pest control, or anything else along those lines, this is going to be applicable. So don't, hop off this Facebook Live because there's going to be a lot of content applicable to any service business that is watching this. So, Carla, if people haven't seen you on Facebook, you've been pumping a lot of really good, valuable content that's executable for specifically lawn care and landscape, but any service business, I think, would apply to this. So if you wouldn't mind really quickly, I know we're kind of rehashing what we just went through and we got kicked off, but give a quick background if people are just tuning in of how you cut your teeth as a CPA and then how you ended up actually transitioning into the green industry.
Yeah, so I first started off at a small generalist firm, and we didn't really niche down on any industry and trying to really help any industry per se. It just so happened that we had a lot of clients in the green industry. And so I saw the same reoccurring issues that they were facing, such as cash flow, profitability, and just not being aware of the financial statements and how to navigate their financial health. So also worked with a large CPA firm, and we didn't niche down there either. But once I started forming my own business, I really became passionate in that small accounting firm on really helping the green industry. And so it was just a no-brainer once I formed my own business to kind of help this industry and really learning everything that I can so I can guide them in the right direction.
Yeah, and I really appreciate you joining us. And I know 20 years plus, almost now 25 with the lawn care business that I owned, snow removal lawn care in upstate New York. There was a lot of things through those 25 plus years that we were looking at cash flow, charts of accounts. How do we keep our bookkeeping up to date, whether it's QuickBooks Online or QuickBooks Desktop? And when we're talking to that CPA, most of the firms that I used, pretty much all the firms that I used in my business were the generalists. They didn't understand what we went through in a daily basis and the cycles of cash flow and the different ways that when we lived in those trenches, how a service business should interact with an accountant. So I had to kind of go out and get my own education to be able to talk accountant talk in the service business and say, okay, what are we talking about? Are we talking about top line revenue, or is it gross revenue, or what are these different things? And what are you calling it on the chart of accounts versus what's actually in my budget? So that was really an interesting thing. But I figured out once we got the accountant, the business owner, and my financial advisor all on the same page, talking the same language, that's kind of when the magic happened. But before we really get into that, if you're just starting out, or even if you have an existing business, I think one of the most important things that you can bring some content to is entity structure. So a lot of people are going out and saying, well, should I do a DBA? Should I be an S Corp? Should I be a C Corp, an LLC? Or if I'm just starting out working, out of the back of my garage, do I even need this, or can I just kind of fly under the radar? So would you mind spending a few minutes just breaking down the different types of entities, the pros, the cons, and maybe based on whether it's a sole proprietor, a partnership, maybe a husband and wife team, is there certain things that play into a better entity structure for taxes? And I'm assuming you're probably going to hit on some liability or the ability to shield yourself from some liability as well.
Yeah. With these entity structures, a lot of the business owners are always, okay, where can I pay less taxes legally? But also, we have to consider some non-tax issues sometimes, depending on your situation. So I think the one that is so popular is the LLC. And that's because of all of the advantages that it has. And it's also very confusing to some small business owners. And I totally understand, just because the LLC does provide that limited liability, which is awesome. So if you get sued by anybody, they can't go after your personal assets. They can go after only your business assets, which is a huge plus. But the reason why it's a little confusing is because an LLC can be taxed as anything. It can be taxed as a sole proprietorship, S corp, corp, and a partnership. So that's what makes it confusing, and I'll break that down right now. So under the IRS's eyes, if you are applying for an S corp as a single member, you're automatically going to be taxed as a sole proprietorship. So you're going to file your taxes in your 1040, your personal tax return, under your Schedule C like you normally would, but you're still getting that limited liability piece, which is awesome for someone who's just starting out but still wants that coverage. I think that is an awesome way to go. But if you're starting off with a partner, like you said, maybe a husband and wife, the wife's going to do, the bookkeeping side or like the admin side, they'll automatically place you as being taxed as a partnership. So 2 or more under an LLC, under the default rules, under the IRS, you're going to be taxed as a partnership. But you can be taxed as a corporation or an S corp. So you can, if you're an LLC, you can elect to be taxed as an S corporation or a corp. So I think one of the major advantages of applying to be an LLC is the limited liability piece, and also that it's so flexible. If you start adding more revenue, more clients, if you start adding more employees or want to bring in a partner, it can go with you as far as taxing structures go. So you can elect to be taxed as an S corporation along the line if that's what's going to benefit you. Next up is a partnership. Like I had mentioned, that's 2 or more owners, and a partnership is a flow-through entity, and a partnership itself does not get taxed as an entity. So all the net profit or losses at the end of the year flow through to the shareholders, and then the shareholders claim that on their personal side. But in a corporation, the corporation itself does get taxed at 21%. So I think that once you are a corporation, you're getting taxed on your net operating profit at 21%. But also, if you're giving out distributions to its shareholders, you're going to get taxed again. So you have that double taxation right there. In a sole proprietorship, you don't have you don't have limited liability. So you are the business, and the business is you. You're filing it under a Schedule C on your personal taxes, but it is low cost to form. So if you're starting off and you don't have a lot of money, it's only a couple $100s to form. So that's a big plus. And the simplicity of taxes, you just file your income and expenses on a Schedule C and you're done. It's very simple. But what I see, what benefits the landscaping industry the most, and is the S corporation, and that's because the S corporation gives you limited liability, and under the S corporation, the entity itself is not taxable. It is a flow-through entity. The profits flow through the shareholders, and then you take care of that on your personal side. But also, you save money on self-employment taxes, which are 15.3%, so a large percentage, and you save money on taxes that way by being an S corporation. So I see that as the most advantageous for landscaping business owners.
And Carla, I'm so glad you mentioned that. So that was one of the questions I was going to have for you is the benefit of that S corp versus that self-employment tax. It almost pays for itself, especially with the ability of that corporate shield. So unless you're absolutely negligent and purposely run someone over, that corporate shield, in itself is great. But then these tax savings from that self-employment tax is a massive benefit. So that's what we did in my business the early years, literally when I was in college, filed as an S corp, and then bought the additional insurance for an additional umbrella around that. But that's huge. But I'm also glad you brought up the LLC, because that's also a very interesting structure. And be completely transparent, when we started SimpleGrowth, that actually started as an LLC. And I got upset with my accountant, because it's the same guy I've had 15, 20 years. But once again, we weren't speaking the same language. So, it was via email. Finally, I called up and got Greg, and and Crystal on the phone. I said, guys, what are you doing here? I'm getting letters from New York State because we wanted to recategorize the business as an S corp.
Right.
But they didn't kind of like, not in normal terms saying you can be an LLC, but file tax wise as an S corp and still catch the benefits of both of those. So very interesting when you're going to talk to a professional like Carla. Ask the questions. There's no stupid questions around this. And a lot of times it's just miscommunication of like, you know, we're talking about whatever we talk about industry specifics as professionals, and the CPA is talking their language as return. So you got to make sure you're on the same page, because Greg and I were not on the same page. And I'll be honest, Carla, I was frustrated, but really the guy had my back. He knew what he was doing, but I'm ripping my hair out of here and going, man, this guy doesn't know what he's doing. This is crazy. Like, this is nuts. Like, you know, he's telling me one thing, but I'm getting other letters from New York State. He goes, no, we're filing as an S corp. I'm like, oh, all right. Well, I looked on Google and I'm like, oh, you can do that. All right, now this is what he's talking about. Right. So I was like, you know, I owe this gentleman an apology. But after we set up this corporate structure here, the next thing that most small, medium, or even large businesses run into, especially in the lawn care industry, but even home cleaning as well and pest control, is cash flow. And a lot of times we see this with seasonality, especially in our businesses. So I know, at least in my business, especially in the upper Northeast here, where we do lawn care and snow removal, but we even see it in the companies in the South and Southwest, is it's somewhat seasonal. Even if you go year round, you ramp up in the spring. It's a cash outlay for marketing, advertising, equipment, repairs, and you really don't start seeing positive cash flow where it's extra cash flow in the bank, at least in my market, till like July or August. And there's definitely a seasonality of that cash flow. And then if you're blessed or not blessed enough, depending how you look at it, to have the crazy white stuff flying out of the sky as snow to plow, by the time you've got that bank account ramped up again and you're pushing some bottom line profits, you're dumping an extra $150,000, $200,000 in pre-bought materials of salt and ice melt. And then it's just this financial roller coaster of cash flow. And it's interesting to see the perspective of SimpleGrowth, where it's more of a subscription-based model. It's year-round spread out. And I think you're probably going to hit on this, how you can do this in the lawn care industry, but to see the comparatives of a seven-figure business in a seasonal business versus one that's more, I don't want to say leveled out completely. There's a little bit seasonality of SimpleGrowth, but it's completely different. So if you're not working with a CPA that understands seasonality and cash flow, that's another major advantage of going to a vertical or industry specific CPA. So my question for you, Carla, is how do we go out and look at that cash flow from a tax standpoint or just a business operation standpoint? And are there some ways that you recommend to level out those cash flows for the seasonality of a lawn care and landscape business?
Yeah. I mean, I think that the seasonality of it really affects cash flow. And I think that we all have to go in with a plan. So as long as we have a plan in place, then we never have to be on that roller coaster, you know? So starting off with the subscription-based model, we're in a subscription-based era. So we're subscribing to things, some boxes, I don't know, it's a wine or anything of this sort. We're subscribing on Amazon, right? So that's the new normal. I mean, we are really getting out there and just subscribing to different services. Why can't we subscribe to landscaping lawn care services? Okay, we can bring this model and into this, especially when you're providing lawn maintenance services, whether that's maybe 6 months. Go ahead and get your clients signed up on a subscription-based model. That way you have those predictable cash revenue coming in and you can plan for that. Okay, I'm going to get $80 from XYZ person for the next 6 months. And that is really what we want to focus on, is predictability and what we're going to get in and what's coming out. That's really what cash flow revolves around with. And being on a subscription-based model is really going to help you with that. And so as far as invoicing, I see a lot of clients fall behind on their invoicing as well. And that prolongs their invoicing cycle and their cash flow cycle. So when you're performing a job or a big project, make sure to invoice them the same day or even ahead of time. right? Or have it, where you're saying, okay, it's 50% down before, and then after we're going to charge you the other rest 50% of it. So I think just staying ahead of that invoicing is really going to help cash flow in your business. As far as CRMs go, such as Service Autopilot or Jobber, that's really going to help you invoice clients. Clients are going to have a place to come where they have a client portal and they're able to pay you quickly and easily. Having that within your business and staying organized on top of that is really going to help you with cash flow. And building up that savings account. Okay, so during those busy months where you're going to have a lot of cash coming in, having that, that savings account there for the slower months during the winter, and being ready for the spring rush. That's going to not only provide you with a peace of mind, but also allow you to invest in materials ahead of time or any other equipment that you may need for the spring rush that's coming up.
Awesome. It's a lot of good points there to break down. I'm sure, Cody, you've got some questions here. I'll let you hop in a sec. But one thing I wanted to touch base on, I think that was really a good point that I think, especially if you're doing landscaping design build, you can hear the pounding in the background here. We're getting a pretty good sized landscaping job done at the house I'm working here. But the contractor was really smart about it. He dialed in what exactly was included in it in each phase, and he required a 50% deposit. And then as each part of that phase hit a certain threshold of like 25, 50, 75, and 100%, there was basically a percentage of the remaining 50% that you knew cash flow wise. So that covered his fixed and variable costs and materials, and basically probably part of his profit. But he knew predictably when that cash flow was going to happen. So I think that, living that on a consumer end, it was nice to see it laid out in full transparency, but also being on the business end, seeing that that's going to keep the wheels greased and going. The other question I had for her, not to put you on the spot, but it's very interesting that a lot of times, so like in the Northeast, like a lot of people are nervous of doing a subscription because they're going to try to annualize a 12-month contract for work they're doing from April to October. So is there anything that you'd recommend as a professional, at least contractually or in some way? What happens when the consumer's paying that installment from April through October and they're like, yeah, we're done. We're firing you, but you still haven't caught the last 4 months of that installment for the work that's already been previously due. Do you front load the installment before the season starts, or do you just say it's your installment while we're working? Because I know that's usually a big question in the service industry. We like the idea of installments, but how do we protect ourselves?
Yeah, so that is a major question, because once we come to the winter months, then the client's like, oh, well, you're not really providing like the services that you were providing before. So it could be broken down during those 6 months only. So just breaking them down during the months that you're actually performing the work, and then keeping it within that realm, so that the client doesn't feel like, okay, they're paying like 12 months, but okay, what's happening during the winter months, and they don't feel that. So we're there, like, okay, what are you guys performing?
And I love it, but at least in that 6 or 8 months, it's consistent, predictable cash flow, especially if you have a drought. A lot of times people will be like, well, just skip the lawn mowing for the next 3 weeks, and then you've lost a whole month's worth of revenue. Once that's gone, it's gone. Right. But if you subscriptionized, I don't know if that's really a word, but we're going to throw that in there. Subscriptionized your 8 months, you've at least created predictable cash flow for those months, no matter what the inclement issues going out with the weather. And it's not as bad as being a farmer, but let's face it, there's been years where we've had tremendous drought, and in our business, we actually, somewhat of a subscription idea is we charged 50% if people skipped it. So that covered our fixed and part of our variable cost to keep that spot on the schedule. So there's some interesting ways of doing that. But I'm glad you brought that up, because very, very insightful. How do you keep that cash flow going in that seasonal business? Cody, I know I've been doing a lot of talking here. So you have any questions for Carla as far as up to this point?
So my biggest concern in moving to a subscription model is exactly what you're already hitting on, which is like, once I've done the work for you, how do I keep you on? Are you seeing any of your clients that are like plugging in interesting services into the fall and winter to keep themselves in front of their clients?
Yeah, for sure. We want to, I mean, we're going to have that cushion that we talked about, that savings account for those slow months. But that doesn't mean, okay, forget about revenue, right? So we want to provide some leaf cleaning in the fall. We want to provide maybe some holiday lighting, you know, some snow plowing services. So we do try to bring some other revenue streams, introduce something else so we can keep that revenue flowing through those winter/fall months for sure. Yeah.
So, and then how does this impact your initial selling season? Because it's kind of like, for some of these companies, this is turning into like, we're a full service outdoor home maintenance sort of company. So how is that impacting marketing in the spring?
How is that impacting marketing in the spring? So I would say that maybe in the spring, we want to focus more in on like the regular maintenance and installation services rather than the ongoing scheduled services. So the things that they're already used to, getting. Mm-hmm. If that makes any sense.
Yeah, completely. Obviously, we want to put you on the spot, but being the expert, I had faith in you. You definitely would give us the right answer and, drop some knowledge. And obviously you are. So really appreciate being candid about that. But now I'm kind of looking at the big picture, Carla. I've got this entity I've broken down. Now I've got some predictable cash flow through subscriptions and trying to offer additional ancillary services to raise that client lifetime value in the lower season.
Yeah.
But now I'm talking about cash flow. Well, how am I looking at my revenue, my chart of accounts, and my expense? So is there certain naming conventions with maybe different numbers in the front of each account, certain chart accounts we should be looking at as far as expenses, income, long-term liability, as far as loans and things like that for equipment investments? What does that look like when we're just starting out, if we're really refining that in our business? So maybe we're in 2020 right now, but as we go into 2021, we may want to kind of streamline and optimize some things in those chart of accounts. And I don't know if it's applicable for this talk, but maybe even want to hit on, if you're using QuickBooks, classes based on the ability to separate those things out.
Yeah. And so all of our clients use QuickBooks Online. And I think, whichever accounting software, you're going to have a chart of accounts. And in this industry, it's so important to be on top of it and organized within your chart of accounts, because I see a lot of clients that I receive, they have chart of accounts, but, their assets are not in place. They're being treated as an expense. So if they purchase, trailers or sprayers, for the people that do pesticide, they're getting treated as expenses, but they're really not expenses. They're assets, and that's what value that we bring in being specialized in this industry, is that we know not to just throw it in the expense account. We know that this is equipment that people are using every single day, and that's going to benefit the business throughout its lifetime. And having an organized chart of accounts in place is really going to help you get that correct and accurate financial picture geared toward this green industry. So like I said, I talked about fixed assets a little bit. Having those assets on your chart of accounts recorded correctly, such as trucks, trailers, sprayers, whatever other equipment that you may be using. Cost of services. So anything, we hear it in product services all the time. Cost of goods sold, right? We're selling a service, cost of service. So anything that is directly related to giving that client that service should be in cost of services. So any materials, fuel, machine gas, or gas that you're using to get to the client should be in cost of services. Any contractors or employees that you're using should be in cost of services. Other operating expenses, such as advertising, office expenses, your admin people, those things should be separate. That should be in operating costs. And having that broken down is really going to give you a clear picture at the end of the day in your financial statements. For example, having your revenue broken out. So are you providing weed control services? How much are you getting from that? Are you providing lawn maintenance service? How much are you getting from that? So having those different line items in your profit and loss is really going to give you a clear picture of, okay, maybe I should focus in on this installation services because I'm making a lot of money. I have a lot of clients in this realm. So should I invest more in advertising into doing this? Or weed control, I'm really good at this. Should I advertise in doing that? So I think that having your chart of accounts set up the correct way is going to give you that picture as far as making the important business decisions moving forward.
I got to unmute myself here. I got the, you can hear the saws in the background. But anyways, Carlos, I'm thinking that you're painting this beautiful picture of, to me, almost looks like a profit and loss. I've got my gross profit. I've got my net profit. I'm breaking it down per service. And then I'm also figuring out my depreciation on my equipment
Right.
over that 5 year or whatever that span is, or maybe you're accelerating that depreciation.
Exactly.
Obviously, you want to talk to your accountant what the best move is. And one thing my accountant at the early years told me, like, you can accelerate that, but eventually at some point you're going to have to pay that back. I didn't quite understand that until we actually ended up selling the business. And lo and behold, there's some implications of when you actually accelerate and don't accelerate that depreciation.
Right.
So once again, he knew what he was talking about. He just wasn't talking Mike language in the early years. So, bring it down. Just a simple man that mows lawns, but I need to know what that implication is. And a little off the topic, but as you're painting this beautiful picture of chart of accounts here, and I'm just loving it. I can envision this. Now, are you recommending, or do some of your clients, I guess, if you recommend or not, do you use a budgeting feature in QuickBooks Online based on that? So you have your actual versus your budget in there with the forecasting reports, or is that something you use in a separate software? What are your thoughts about using budgeting in QuickBooks Online, or even desktop for that matter? I know desktop's a little more robust, but at the end of the day, it paints the same picture. And I feel like most service businesses that we deal with, their first problem is, and this is probably something you don't hit on, Carla, but they don't know their costs to operate. So what their cost is, their true break even before they make a net profit. So our totally loaded cost break even per man hour. And then obviously they usually figure it out themselves or go to a consultant that does financial consulting to figure out, I need to charge X amount of dollars per man hour, and this is what it's costing us. So maybe you do that, but where does that come from? That kind of that data, and then the budget, and then your accountant. How does that all, in your opinion, come together? And it may not even be something you do, but I was just curious if you had some insight to how does all those three knowledge points kind of balance out?
Yeah, I understand. So I think that as far as budgeting goes, I'm not huge on budgeting, and I'll tell you why. Budget is something that you set up at the beginning of the year, and you say, this is what we're expecting, this is the expenses we're expecting, and here you go. And it's something that you compare, like you said, this is what we have now, this is what we were expecting. Okay, that's great. I don't really like budgeting because it's so retrospective. You're looking at the past all the time and you're saying, oh, okay, that was great. We didn't hit that, or we did hit that. But I focus on cash flow forecasting. So we're always looking ahead. We're not looking at the rear view mirror all the time. As for budgeting, we're always looking behind. We're always saying, oh, this is what we expected, this is what we did. But what forecasting does is, this is what we're going to do, this is what our numbers should look like, and this is how we're going to plan for it. So do we want to hire that extra field employee? Do we want to hire that extra salesperson? Does that make sense? What kind of revenue are we looking at? How much are we going to advertise? What can we get back from that? So that's why I look for forecasting more than budgeting. As far as forecasting in QuickBooks Online, I use a different software for forecasting, cash flow forecasting. But they integrate with QuickBooks Online, and it just makes it easier to compare and contrast, like you said.
It makes complete sense. I was just curious kind of where that, and I thought that'd probably be outside of the scope of what you do, because most accountants don't do that. But I love the fact that you're forecasting ahead. I'm assuming that's going to tie into your projected quarterlies,
Exactly.
And Cody's probably heard this story, but I'll tell you, I'll never forget the story of driving down the highway when the lawn care business was a pretty good sized business. And Greg, the accountant, God bless him again. Hey, Mike, what are you doing? I'm driving down, 390 the highway. Whereabouts are you? He goes, oh, well, there's a restaurant next exit, Trotta. You mind pulling off over in the parking lot? I thought we were maybe having an afternoon cocktail at the end of the day on Friday to review the taxes. Like, oh, that's great. Let's go. Some of the parking lot. Oh, you want me to come in and meet you? He goes, no, I'm at the office. Go, what do you want? He goes, well, are you parked in the parking lot? I go, yeah. He goes, well, you owe about $45,000 of taxes this quarter in 2 days. Now, we obviously did it, but obviously that projection of cash flow would have been pretty instrumental. So our conversations changed significantly at that point. And I agree with you 100% that cash flow projection and forecasting is essential.
Yeah, because there are less surprises, like you said. You got that big surprise, but I think of it as you're planning a trip with your family. You're driving out, and you map it out. Where you're going from A to B, but there's always things. You might have a newborn, you pull out to the side, you have to stop. Now you have to call the hotel. Oh, I'm going to be late. Oh no, the wife always needs to go to the bathroom 100 times. So you're going to make those stops. Okay, life is not predictable. You might have told the hotel, we'll arrive at 5, but really it's 8 o'clock.
Beautiful.
So that's how I like to describe it. Life is not predictable. Look at what happened with coronavirus. Oh. So that forecasting is really going to help you because you can change it. It's dynamic. It moves with you. And that in turn gives you less surprises when it comes to quarterly taxes and what we can expect in the future. So
awesome. So I know your time is obviously very compressed schedule. I appreciate you spending time with us, but one more thing I want to hit on before we let you go. You've been awesome just dropping some really candid knowledge and actionable knowledge too as well, but bookkeeping. So now we've got all this set up. We figured out our entity. We figured out our cash flow. We've got the chart of accounts. We're forecasting out where we need to be, and it's a fine-tuned machine. But I'm still out in the field right now, or my team's out in the field, and I'm too busy managing them. How do I keep up with my bookkeeping? So I'm assuming this is only good if your books are up to date. And I know that's one thing in the early years of Callahan's Lawn Care. We were a little negligent. We'd wait to the end of the month or 2 months to totally reconcile everything. Now it's SimpleGrowth. I'm literally paying my internal bookkeeper to update everything weekly. So I know within 5 to 7 days, literally to the penny where we're at, and the ability to see where we're at and where we're going. And that's going to reflect that cash flow and the chart of accounts and everything else you've talked about. It kind of, without that, it kind of all falls apart. So yeah. Would you mind just dropping some knowledge or just some ideas about bookkeeping, how to keep it up to date, how to stay consistent, and what's a good frequency? So obviously it's SimpleGrowth, like every week may not be applicable for a lawn care or landscaping company. And it probably isn't, obviously owning one for a long time, but what would you recommend is current enough, but not too crazy that it's going to cost you too much money or drive you crazy?
Yeah, I think that, falling behind on your bookkeeping is such an easy thing to do, especially if you're out on the field and you have so much work there, and it can fall behind, but it's just so costly when it falls behind, not only on tax purposes, but then when you go and hire a bookkeeper and then they have to do all that cleanup work, it just becomes one lump sum of just bills. So I think that exactly when you first start out and you're doing your bookkeeping on your own, I think that maybe you don't need it up to date every week or every month, but you would like to have it up to date enough where, okay, I know exactly where I stand. So maybe every 3 months or 6 months, maybe that's applicable to you, but it really depends on where you are in that process. So we normally recommend, every week or every month, to have it up to date. So I have a lot of, clients that come in and their bookkeeping is not up to date. And just to give you a little bit of background, I have one client, she came in, her bookkeeping was not up to date. more than a year. And she had lost out on a lot of tax savings, and it is just so detrimental to the business because it obscures the big picture. So it obscures your financial statements. You don't know where you stand. You lose out on important tax deductions, for example, payroll and paying out your 1099s. And if you don't do that, you're losing out on those expenses. So when I took over and I got her on track, okay, this is the tax deductions we should be reaching, and we should be paying out the 1099s, and you should be on an IRA and different things like that. And then, yes, there's a cost to obtaining a professional to do it, but the benefit outweighs the cost. And being behind on it, like I said, you don't know if you can afford X, Y, and Z because you don't know what your financial statements look like. You don't know where you stand. And that is one of the major concerns that my clients come with. And so getting them up to date and having their financial picture in place, tying in with that cash flow, tying in with that chart of accounts, we're good to go. We know exactly where we stand. We can make those important business decisions moving forward.
Awesome. Great advice. And I guess one of the things too is I'll just bring up is a lot of times when we're working with businesses, by no means do we do financial consulting, but for some reason it always gets back to the financials, especially if you're just starting out. Off-road sales tax credit is a big one. A lot of people don't have that buttoned up. So on-road and off-road fuel, tracking that. I mean, and you can go back, I think you'd correct me, right? You can go back about 3 years and redo your taxes and refile for those. But I mean, we've literally found $8,000 to $10,000 of literally tax credits back for clients. Literally, we're going into some overhead recovery numbers, and they're like, "Well, hey, it looks like everything's lumped in this one sum. Like, do you guys file that credit?" Well, no, we didn't know it existed, and they're like, "Oh, well, wow, we've got a lot of extra money to actually pay you to help us do some other stuff now because we had no idea it was there." So, to Carla's point, yes, it may look a little more expensive, but even if you're a smaller business, you may be stepping over dollars to save pennies. Like, it is probably beneficial to hire a professional like Carla over at Cycle CPA. On Facebook, she's under the landscaping accounting Facebook page. But I mean, to bring an expert in and just demystify some of that stuff is really a benefit to your business. And it allows you to concentrate on what you do good. Maybe it's sales, maybe it's marketing, maybe it's being out in the field doing the work. But let an expert, in my opinion, do what they do and drive that business success exponentially. And I just can't thank you enough coming on, Carla. Just a lot of knowledge. Really appreciate it. Cody, any closing thoughts, questions before we wrap it up here?
Yeah, I want to grab Dave Voyna's question from the comments here. Carla, earlier you were talking about a tool that you use for forecasting that integrates into QBO. Do you know the name of that offhand?
Yeah, give me 1 second. There are a couple.
You're as bad as me. I've got them all in there, but I have no idea what name they are. Just boop, boop, boop.
I know. So there's the Float app. There are a couple of them. The Float app integrates with QBO, and I think that's a good resource as well. So
cool.
Awesome.
Yeah.
So Carla, if people are interested in your expertise around accounting, especially in the green industry and landscaping, how do they reach out to Cycle CPA, or how do they find the landscaping accountant on Facebook? I know you've got a great group there where you answer questions as well as they come up throughout the year. So if somebody's interested in finding a service, how do they actually reach out and contact you?
I think the most easiest way to reach out is through Facebook on the group. It's called Landscaping Accountant. Or you can reach me through email at carlap@cyclecpa.com.
Awesome, Carla. Can't thank you enough. SA Weekly Talk Show coming back with another heavy hitter next week. Going to be Jeremy Atkinson, and he is basically over at Contracting Pro. He was a service autopilot user. Him and his brother Trip grew in scale probably just over a 7-figure lawn care and landscaping business, and actually sold it and then got into general contracting. So Jeremy and potentially Trip are going to be joining us and dropping some knowledge how they utilize service autopilot, automations, and built a business to sell. And I have a feeling, Carla, he's going to be talking about a chart of accounts and a solid foundational financial plan where they exited the industry and then got into some larger contracting. So always fun to see, friends of the SA family coming back and dropping some knowledge and checking in on them. So going to be hanging out with Jeremy Atkinson, potentially his brother Trip, dropping some knowledge on the SA Weekly Talk Show next Friday, 1 p.m. Eastern, 12 p.m. Central. Myself, Cody Owen, and Jeremy, and potentially Trip Atkinson. So Carla, once again, thank you so much. Make sure you guys check out Cycle CPA, Landscape Account on Facebook, or hit her up on her email. If you have some questions around accounting, closing up Q4 here. Thanks again, guys.
Thanks for having me.
Thanks, guys.
If you like this show, you might want to check out our resources at www.startsimplegrowth.com. While you're there, enter to win an estimator chatbot. Mike Callahan is available for private coaching.